Welcome to Markets Now. I'm Michelle Rook with Kevin Duling with KD Investors. We're seeing a lot of red on the board here this morning. And Kevin, let's start off talking about grains. I'm sure part of the psychology has kind of gone with these China cancellations that we had of more SRW wheat this morning, right?
Yeah, there was another 250,000 metric tons canceled this morning, so that's a fairly big cancellation. If they continue to cancel all of it, they've got another half to 600,000 to go. The question is, how much does the market already know that? Last week, Tuesday and Wednesday, we really factored that in. We've had higher closes since. Today we're down a little bit. Not as bad as I would expect given that size of a cancellation, but yeah, that's the kind of the headline sticker news this morning. We'll see. To me, it's not acting that bad. Corn and beans aren't acting that bad. They're off the overnight lows a little bit, so we'll see how the day progresses. But they could still have more to go. They could have another 500,000 tons to go, which
that was my question. Are they going to cancel the rest of what they bought from the United States? And why are they doing this? Is it just because prices have gotten much cheaper?
Partly, and it was kind of a surprise to me in the first place that they bought soft red. I mean, with the Panama Canal during that time was shut down to grain and shipping was high. You had soft white out of the Pacific Northwest, which is a lot cheaper. It was odd they skipped over that and bought soft red. So, oddly, it was quite a struggle to get that. The stuff they did ship sourced, and so I think they just waved the flag and they're going to give that back. I don't know if they're waiting to buy more cheaper or if they just kind of overshot the story last fall that their harvest got 20% ruined with the rain, and it looked like they're going to make it through just fine. So.
And Kevin, how much do they have left on the books, you said, to possibly cancel? And do you think they will again?
Well, there's no reason they wouldn't. I mean, it'd be 600,000 tons is what pretty close, plus or minus 50. So, another 2 or 3 days like today, and they'd be completely off the books. So, as for is it in their advantage too? I don't know. I mean, they bought it at 550 futures, so it was cheap then. It's cheap now. Like I say, they always have a big position in the futures market, and so they're always keying off of that. I'm sure they came out just fine on whatever they're trying to do.
Sure.
So,
yeah. And we had turned the corner, it looked like, on Kansas City and Minneapolis last week with those higher weekly closes and whatnot. So it's kind of disheartening to see this. We also had some Stats Canada information out this morning, but certainly there wasn't a lot of change there from expectations. Is that right?
Yeah, that's correct. Everything came in pretty much as expected. Spring wheat plantings are expected to be down 1%, canola 3%. They're expected to go more into legumes. Really no market news there to move anything that I could see. Minneapolis was holding up the best this morning. It was down 3 or 4 a minute ago. So
the other overnight news, China PPI news came in, the 17th consecutive month where it went down. So did that also weigh here initially on corn and soybeans, you think, or?
Yeah, the overall tone's negative this morning. I mean, I think canola was the only green thing on my screen to start out here this morning, and it's everything else has kind of got that shadow over it. And you've got the dollar up, 10 points, and yeah, it's just, I mean, we have those macro sell days is what I call them, and this isn't necessarily a macro sell day. I'm not being led by the stock market going lower, but it's there's just a negative light today, and I don't know. It's a long week. We'll see how things go. It's not at least it's not a bloodbath yet. Hopefully it remains, calm. So
yeah, I know when we get those risk off days, it's always tough, but you look at the commitment of traders report as well, and the funds extended their short position pretty much in everything again last week. Talk about what you think might change that. Are they extended far enough here? Are they overextended, and what could get them to move out of those short positions?
Well, given there's four things that I'm following that all have the potential, each separately to run them out of that position. It's surprising they continue to build, but they're going to go with what works for them. And it's kind of like football. As long as they can keep running the ball and we can't stop them, they're going to keep running the ball. So the four things that could move them out of there, we've got the dollar index. It's breaking down. It looks like it's getting ready to accelerate lower. Chart wise, you could see it drop 10-12%. I think that would do it. Just starting that trend would do it. You've got the safrinha corn crop weather, which continues to look threatening to me. The heat and the dryness starting to move north. It's right on Brazil's border right now, and we're just we're a couple weeks away from that critical time. You've got NATO threatening to move into Ukraine and push Russia back. They've got all their equipment ready. It sounds like a spring offensive may hit there. I think that would be a bigger disruption than the original Ukraine war, and so there's quite a few things that could kick them out of that position. So,
all right, I got three. What was the fourth one?
Right, yeah, no, my brain's shutting down on me. Let's see. I got the dollar. We got the Ukraine one.
Safrinha corn, NATO. You said the one was a little bit longer extended period.
Right, that was the Russian weather. It's the exact same ENSO pattern as they had in 2010. That was their last drought, and they've been dry the last month and a half. The crop looks great right now, but it's the same ENSO pattern. They've got a decent correlation with ENSO cycles over there. So whenever you go from a moderate El Nino to a La Nina in very fast time, it tends to dry them out. So I'd certainly keep an eye on that as we get into April and May.
Yeah, very good. So we just need one of those, Kevin. We don't need more than one of those necessarily.
Correct. Yeah, those are four things that I think could topple their position and make them run for the sidelines.
Yeah. And you mentioned the safrinha corn crop. We're supposed to get new numbers from CONAB tomorrow, but you don't expect us to see much change there, you don't think?
Not yet. I mean, the corn weather hasn't been threatening enough yet. Still too early, so they're not going to move that number much. The soybean number, they might back off another one or two, but they won't go more than that. So not going to be a market mover, I don't think. So.
Okay. Cattle market, we're seeing some pressure again this morning. We had a poor close on Friday, making new highs for the move and then closing lower on some pretty positive news. Are you worried that market is rolling over?
It looks like it. Technically, I don't want it to. I talked to enough big folks in the cattle industry that all think we're headed for one more big leg higher. I just feel like this is a good place to throw on some LRP positions for your fall calf crop and winter calf crop next year and take some of that risk out. These are good numbers, and I don't know if the economy is going to support a whole lot higher numbers, even though supply and demand would suggest that we should stay firm. So I just don't trust it. And if the hedge funds want to go push this thing, we could go lower than people think, and that's why we hedge. Put the good number in the bank and hope we lose money on the LRP, and then use our own money if it does get another big leg higher. So
yeah, some good advice to be better safe than sorry here.
I think so.
All right. Thanks for joining us, Kevin Duling with KD Investors, and that is Markets Now.